Good afternoon, ladies and gentlemen, once again. I know the launches were exciting. We have a few more exciting launches and, of course, a very important address lined up ahead. So we'll request everyone to settle down a little bit. But in the interest of time, even while we are waiting for all of you to settle down, so it is an absolute honor and privilege to welcome you, Mr. Nagaraju, the Finance Secretary, Department of Financial Services, to the Global Fintech Fest. Sir, on behalf of NPCI and the entire organizing committee of GFF, a very, very warm welcome to you. As we all know, the theme for this year's Fintech Fest is Reimagining India's Financial Ecosystem, AI, Access, and Accountability. This perfectly captures the moment we are in. As technology transforms finance, we must ensure that it empowers citizens, strengthens trusts, and ensures accessibility for all. Shri Nagaraju's distinguished career exemplifies this perfect balance of innovation and accountability. As Secretary of the Department of Financial Services, he has been guiding the country's financial sector towards inclusion, resilience, and consumer protection. Under his leadership, DFS has championed offline payment systems, cybersecurity, and financial literacy, ensuring that technology serves the people and not the other way around. Sir, we look forward to your insights on building an AI-powered financial ecosystem that combines innovation with accountability and ensures access for all. At NPCI, sir, we share your and the government's vision, believing that purpose-driven innovation can redefine the future of finance and ensure that innovation helps build a brighter, more inclusive future. With that, sir, it is my honor to invite you to share your insights with us. Thank you very much, sir. Ladies and gentlemen, may we request you to kindly settle down. We have a lot of people who are near the exit. We request you to make up your mind. Either you can be here for this riveting session ahead, or you can go to the pavilion. But we do request everyone to settle down because we have an extremely distinguished guest, and it will be very, very suitable that all of us hear him with our rapt attention. So even on this side of the stage, can we just request people to settle down? So we'll just give it a couple of minutes, and I'll, I think, once again have the honor of inviting you on stage. So we'll give it a couple of minutes. Sir, in our vibrant ecosystem, I think this is as much settled as we can get. So we'll request you to start the session and proceedings, sir.
Good afternoon, ladies and gentlemen. I think a post-lunch session always is very difficult. And that too, I was told that a few products were launched. So people are very exuberant and also to share the photographs and memories and then to see how their faces are looking in the digital frame. Anyway, it gives me immense pleasure to be able to address this esteemed gathering in the 6th edition of very well-known, prestigious Global Fintech Fest. My compliments to the organizers, National Payments Corporation of India, NPCI, and Fintech Convergence Council, and the Payment Council of India, from bringing all the stakeholders of the Fintech ecosystem under one roof to celebrate the role and the future of Fintech and Fintech entities. Over the years, this platform has not only showcased innovation but also advanced the collective resolve to reimagine the finance for a better world. The theme of the fest, Empowering Finance for a Better World, powered by AI, is quite relevant in today's context as we harness the transformative potential of artificial intelligence to build a financial ecosystem that is more inclusive, resilient, and sustainable. The subject is bound to determine the economic trajectory of our nation in the coming years. India's financial sector today stands robust, resilient, and globally respected. As the finance minister has mentioned in the morning, our banks have maintained healthy balance sheets over the past few years, strengthening capital positions, reducing non-performing assets, and ensuring stability in the face of global headwinds. This resilience has been critical, for no fintech innovation can flourish without a strong and trusted financial system as its anchor. Currently, the world's fourth largest economy, India is on track to become the third largest by 2030 with a projected 7.3 trillion GDP. This momentum is powered by decisive governance, visionary reforms, and active global engagement. Our digital economy already contributes 13.5% of GDP, and by 2030, India's digital is projected to contribute nearly one-fifth of the country's overall economy, outpacing the growth of traditional sectors. The ascent is powered by strong domestic demand and transformative policy reforms, making India a prime destination for global capital. With easing inflation, higher employment, and buoyant consumer sentiment, private consumption is expected to further drive GDP growth in the coming months. The Viksit Bharat mission envisages India's transformation into a fully developed economy by 2047, marking the centenary of India's independence. It aligns closely with the Honorable Prime Minister's guidance to ensure that economic, social, and technological advancements driven by policy reforms and citizen-driven process collectively steer us towards a future-ready and inclusive nation. The banking sector faces rapid technological shifts, yet technology has already transformed India's financial ecosystem, bringing efficiency, inclusion, and resilience. Government and regulators have adopted a whole-of-government approach, creating enabling technology infrastructure. Digital public infrastructure, including Aadhaar, UPI, GEM, Bharat QR Code, DigiLocker, ONDC, Account Aggregator, Bima Sugam, and eSign has become a cornerstone of innovation. The adoption of DPIs by banks and financial players has lowered costs, increased transparency, and scaled up operations. Emerging technologies hold the promise of taking the story to the next level. Artificial intelligence, for example, has emerged as a powerful enabler of innovation and transformation in the financial sector. With immense potential to enhance operational efficiency, broaden financial access, and deliver more customer-centric services. Banks, fintechs, and other financial institutions are increasingly deploying AI across their operations and product lines. In the financial sector, AI's potential concentrates around three core functions: decisioning, detection, and personification. Decisioning, AI can extend credit to the thin file customers by combining alternative data with rigorous risk models, enabling calibrated lending in cases where traditional scores fall short. It can support underwriting for micro, small, and medium enterprises, urban vendors with great nuance, recognizing cash flow seasonality and informal revenue streams. In detection, fraud, money laundering, and operational anomalies can be detected earlier using AI-driven pattern recognition. Machine learning models can synthesize transactional, behavioral, and network signals in real time to surface systemic vulnerabilities and enable faster containment. Personalization, scalable personalization allows design of financial products that impact language, literacy, and lifecycle needs. AI-powered advisory services can democratize access to investments, retirement planning, and insurance decisioning. Banks and NBFCs are using AI to streamline operations, enhance customer engagement, and strengthen risk management. AI-powered chatbots and virtual assistants are handling millions of customer queries daily, and credit underwriting has become more inclusive because of AI. India has one of the largest and most diverse data sets in the world. Every day, through UPI, Aadhaar, GST invoices, account aggregators, and digital banking, billions of secure and constant consent-based transactions generate digital exhaust. This data is not just in volume, it is rich in diversity. It captures the realities of a farmer in Vidarbha, a gig worker in Bangalore, a small trader in Surat, and a startup founder in Gurugram. No imported AI model can understand India's financial behavior as deeply as the data generated here at home. India's investments in digital public infrastructure have created a foundation upon which inclusive finance can scale up. Aadhaar eKYC has reduced onboarding costs from rupees 100 to less than rupees 5, making it viable for institutions to serve low-income and remote customers. To further enhance the functionality of central KYC records registry, it is undergoing a comprehensive revamp. Key proposed features include verification of data and documents through document issuing authorities, use of AI-based and facial recognition technology for deduplication, and provision of view-only access to clients to review and request corrections into their KYC details. Further, a risk-based framework for undertaking KYC for customers have been prescribed to all the financial sector regulators, namely CCL. The FSRs are currently working on detailed guidelines which will be issued to their respective regulated entities for implementation shortly. In order to facilitate VCIP from foreign jurisdictions, in case of NRIs, a pilot is being conducted by State Bank of India in Bahrain, wherein face auth application by UID will be used for Aadhaar verification of NRI customers. DigiLocker is enabling secure document storage and sharing, facilitating faster loan approvals and insurance claims. Financial literacy campaign supported by digital tools and vernacular content are helping citizens make informed decisions and avoid over-indebtedness. Any financial system, irrespective of this scale, functions on the principles of trust. India's regulatory architecture has proactively embedded accountability into digital finance. The RBI has taken several initiatives to instill the element of trust. Customer protection is prioritized by data protection norms under the Digital Personal Data Protection Act. The digitization of grievance redressal mechanism are underway, and platforms like CMS are enabling faster resolution and tracking. Explainability tools are being deployed to ensure that AI-driven decisions are transparent and contestable. Timely and affordable credit has become the backbone to sectors like MSMEs, women-led entrepreneurs, and gig workers, catalyzing livelihoods and entrepreneurship. Flagship schemes of Government of India, from Pradhan Mantri Jan Dhan Yojana to Pradhan Mantri Mudra Yojana to the credit guarantee schemes for micro and small enterprises, have unlocked new opportunities for those with talent but a little collateral. PMGDY has been the foundation of India's financial inclusion journey. By opening over 56 crore accounts with the deposits of 2.66 lakh crore, it has brought millions of women and rural households into the formal banking system. Pradhan Mantri Suraksha Bima Yojana, with over 53 crore citizens today, enjoy accident insurance coverage at just rupees 20 a year. Pradhan Mantri Jeevan Jyoti Bima Yojana has enrolled nearly 25 crore people who now have financial security in times of personal loss. With almost 10 lakh claims already settled, the scheme has delivered critical support to families when they need it most. The Pradhan Mantri Mudra Yojana has transformed micro-enterprise financing, providing collateral-free loans of up to 20 lakh to over 54 crore entrepreneurs. Stand Up India scheme has opened the path of entrepreneurship for scheduled caste, scheduled tribes, and women. With over 62,000 crores sanctioned since its launch, the scheme is fostering first-generation entrepreneurs and making business ownership more inclusive. PM Vishwakarma, similarly, and PM Swanidhi scheme has empowered 68 lakh street vendors by giving them access to collateral-free working capital loans, disbursing over 13,000 crore. By encouraging digital payments, it is linking street entrepreneurs directly to India's financial mainstream. The government is soon going to launch a common startup hub portal to address the financing challenges faced by Indian startups. The idea is based on the feedback from nationwide startup outreach program that highlighted the need for a unified platform to simplify access to credit. The objective is to provide startups with a transparent, efficient, and technology-enabled access to formal credit channels while enabling banks to make quicker and informed decisions. Given that MSME sector contributes 30% of India's GDP, 40% to exports, and 62% to employment, there is a need to have robust credit flow to the agriculture sector and enabling the access to credit to the MSME and supporting entrepreneurship and generation of employment. As part of these reforms, public sector banks have rolled out 9 end-to-end digital journeys for retail, agriculture, and MSME lending. These include personal loans, car loans, education loans, Kisan credit cards, Mudra loans, working capital loans, and term loans up to 25 lakh rupees. These journeys are a landmark step in making credit delivery simple, fast, and accessible. The rise of AI-powered platforms, including PSB'25 and digital loan journeys, has accelerated MSME loan approvals. Automated underwriting using GST data, e-invoicing, and transaction history has reduced the turnaround times from weeks to hours, giving small enterprises timely access to working capital. The new credit assessment methods developed by PSBs, leveraging in-house tech-enabled capabilities to analyze digital footprints, provide more accurate evaluations, and improve access to credit. To further democratize credit, PSB have digitized sanction processes for loans varying from 25 lakhs to 500 lakhs. This initiative has significantly enhanced the ease of doing business, especially for new to credit MSMEs, by reducing human intervention, increasing transparency, and faster disbursal. Account aggregator framework has emerged as a game changer in data-driven credit delivery. By enabling secure, consent-based sharing of financial data, including bank statements, goods and service tax returns from Form GST1 and GSTR 383B, reduces dependence collateral. It accelerates loan processing, lowers documentation burden, and expands access to working capital, especially for small and underserved enterprises. Banks and NBFCs are increasingly using AI and machine learning to analyze MSME digital footprints, including payments, supply chain data, and social transaction histories. This innovation is expanding credit access for new to credit enterprises and reducing the reliance on conventional external ratings. More than 200 fintechs are partnering PSBs in financial innovations today. Housing is more than one just shelter. It is the foundation of social security, dignity, and economic stability for families. With India's urban population projected to cross 600 million by 2036, the demand for affordable, sustainable, and accessible housing will rise sharply. Technology is helping bridge this gap by ensuring that housing finance is inclusive, transparent, and aligned with the aspirations of Viksit Bharat 2047. The direct benefit transfer system stands as the model of how digitization transforms governance, ensuring 3.48 lakh crore in savings while expanding beneficiary coverage 16-fold. And with the programmable feature of CBDC, we are preparing for a new future, one where welfare is not only delivered seamlessly but more intelligently, with funds reaching the right hands for the right purposes. On strong foundation of financial stability, technology has enabled India to leapfrog into an era of unprecedented financial inclusion. Today, UPI processes over 20 billion transactions monthly, with 491 million users and 65 million merchants onboarded. It has redefined convenience, efficiency, and trust in payments. Recognized by the IMF as a global benchmark, UPI continues to evolve through innovations like UPI Lite, UPI 123 Pay, and Hello UPI, reaching every corner of India, from urban centers to rural villages to tribal hamlets. On regulatory side, I think all of us are aware, RBI's regulatory sandbags, its annual global hackathon Harbinger, and the self-regulatory organization framework all combine accountability with collaboration. For that, the DFS has also initiated the PSB's Hackathon Series 2025, which we continue to do next year too, with the aim to engage with students to source innovative solutions to pressing challenges facing the banking industry. All the 12 public sector banks have successfully conducted the hackathon in association with the 12 premier institutions. Around 2,438 student teams with more than 10,000 students participated in this entire journey of the PSB's Hackathon Series of 2025 from all over India. The winning teams of the hackathon are also invited to this GFF to showcase their innovative solutions to the investor, venture capitalists, and technology partners present today. In just 6 years, India achieved what the World Bank suggests might otherwise have taken 50 years, bringing 80% of its population into the fold of formal finance. In conclusion, the universalizing access and embracing disruption in the financial market are essential steps for India's economic growth and social development. They are not opposing forces, but rather complementary strategies pursued by the government. The journey of financial access is a shared responsibility among the public sector, private sector, and individuals. By making financial services accessible to all and harnessing the power of disruptive technologies, we can create a financial ecosystem that benefits every Indian citizen, fosters innovation, drives our nation towards a more prosperous future. Friends, India's financial ecosystem is no longer just a market, it is a model. It is a story of how technology, policy, and resilience have converged to turn finance into a tool for empowerment for every citizen. With the banks remaining strong, technology advancing rapidly, and fintechs pushing boundaries, the journey ahead is not just about becoming the world's fifth fintech leader, but also a global knowledge exporter in responsible innovation. Friends, the story of India's digital revolution is ultimately about the people. So therefore, I urge all the fintech ecosystem participants to focus on 5 areas. One is inclusion, bringing all the citizens into formal financial ecosystem so that they will be able to access the formal financial benefits, reduce the cost and friction points so that citizens will experience they'll have better experience, faster decision-making systems so that the financial institutions are able to make quick decisions, and resolving public grievances. Large number of people actually have a lot of grievances. Please find solutions to address and root causes, and then find solutions to the public grievances. And fifthly, cyber security resilience. I think these 5 things are ones which government is focusing, and I urge all the fintech ecosystem also to focus on the next stage of evolution. The revolution that we are talking should be actually anchored on the 3 pillars. One is integrity, ethical standards, and ease of living to all Indian citizens. Once again, I have reached my end of my remarks. I thank the NPCI and all the organizers for inviting me, and to all of you for giving me a very patient hearing. Thank you very much. Jai Hind.